Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1159A, and today's date is December 22nd, 2016, and the title of the episode is the US government pushing fake economic data to keep everyone in the dark? Let's get into the economic collapse financial news. Now, in the last couple of days, we've been noticing the stock market has been bobbing up and down just shy of 20,000 points. Seems very interesting to me that they haven't pushed it over the edge yet. But what I'm looking at right now is that most likely they might wait until the Friday before New Year's, because Saturday is New Year's Eve. Friday, most likely to give everyone this great feeling that everything is incredible, they might push it up at that point. And it looks like they're keeping it steady, making it just shy of 20,000, and they're just waiting for that moment. We'll have to wait and see, but to me, this is what it looks like. Doesn't mean I'm going to be right, but we can see right now they definitely want this to go over 20,000. And the elite right now, the central bankers, they are pushing out economic data that absolutely makes no sense whatsoever. I mean, when we're looking at the hard data, it's completely fake on what they're putting out there. It doesn't even match up anymore. I mean, think about this for a second. Initial jobless claims. Before the election, all of a sudden, they just dropped. They declined dramatically. And then right after the elections, they pop right back up where they were prior to the elections. Very odd. Why would that happen all of a sudden? Well, they manipulated it for the elections. Now, what's very interesting about this is that initial jobless claims, going back all the way to the 70s, every time initial jobless claims hits a low, and that low is around 300,000 jobs or so, and once the trend goes below that, all of a sudden, we're in a recession. Now, it didn't happen like that all throughout, going back to 1970. Sometimes it was a little bit above that line, but the bigger recessions, well, they dropped below 300,000, and then boom, we were in this recession. If we go back to 2008 or so, it came down just below 300,000, and then boom, everyone lost their jobs. I'd say the majority of the people lost their jobs. Not everyone, but we know that there was a lot of people out of work. This time, we're hovering around 275,000, way below the 300,000 line. And we can see by looking at this that they have manipulated this very, very far, where it looks like we're not even going to be recession at this point. We're going to be in a collapse scenario. We're already in the recession because we're already starting to see the initial jobless claims start to rise once again. Now, very interestingly, they're telling us that everyone has a job, everyone's making good money, unemployment's down by 4.6%, and we're in this holiday season. But what's very interesting is personal spending month on month is declining. We see that personal income is also declining at the same time. Combine these two, and the savings rate in November plunged to its lowest since March of 2015. And what we're seeing right now is disposable real personal income per capita dropped from $39,292 to $39,247. And this is the weakest growth that we've seen since 2014. And it shows us that, are people really getting good paying jobs? And from this, not really, because income is continually declining. Savings are declining. Spending is declining. So something really doesn't make sense. Now, yesterday, the corporate media was all over the place with existing home sales. They've surged, the best we've ever seen. Well, something really doesn't make sense, and I discussed this a little bit yesterday. And when we look further into the hard data, we see something very interesting. Now, the National Association of Realtors, they want us to believe that home sales occurred in November at 5.6 million annualized rate for the month, up 15.4% from November of 2015, and up 0.7% from October. But they left out that the original report for October was revised lower, pushing the data into November. But, okay, let's put that aside here. Mortgage application data completely contradicts the National Association of Realtors. The interpretation of the data that was collected does not match up what they are telling us. If existing home sales are based on closings, escrow, clears, which means the sales report for November is based on contracts signed primarily from October and some in late September, early November, well, during that time, mortgage applications began dropping off a cliff in late August. Something doesn't jive right here. Looking at the data itself, you'll see that the National Association of Realtors data sampling shows that home sales dropped by 6.7% from October, yet its seasonal adjustments suggest that home sales increased from October to November, despite a massive plunge in mortgage applications during that period in which contracts would have been signed for November's closings. It doesn't make sense. What they're telling us makes no sense. And then Freddie Mac comes out and says home affordability drops to 8-year lows, where they're saying that people can't even afford homes. So people can't afford homes, the rate increased, and mortgage applications declined, and they're trying to convince us there was this huge surge in purchases. It doesn't make sense. And they forgot to tell us that they revised the numbers. So what we're seeing right now is a complete lie to go along with their narrative of the story that the economy is improving. Think about it. Look what they've done. They've manipulated the unemployment. They brought it down to 4.6%. Spending is declining with all these people having jobs. Savings are declining with all these people having jobs. Retail sales, we know, are estimated. We know they are absolutely awful. Black Friday, Cyber Monday, a bust. We know that individuals can't afford the homes. So something right now doesn't make sense. And we know that corporations, Caterpillar, IBM, all these different companies, they're not making sales. Profits are very low. They're laying off people. But the stock market keeps moving up and up and up. Again, something doesn't make sense. Now, according to a separate analysis released by RealtyTrack, home affordability in the fourth quarter tumbled to the lowest since the financial crisis of 2008. 29% of local markets are less affordable than historic norms. Well, once again, how are people purchasing these homes if mortgage applications are declining and interest rates are going up? We already know from the other data that we received, millions of people were pushed out of the market. So this all doesn't make sense. We also are getting reports that durable good orders, they've tumbled by 4.6% month on month. This is the biggest drop since August of 2014. And this is the big ticket items, washers, dryers. And if you remove defense orders, well, it completely crashed year on year by 0.5% and month on month by 6.6%. So we have all of this data that they're trying to throw at us. They have the stock market trying to reach 20,000, and they're suppressing precious metals. Then they come out where they say, that third quarter GDP, forget 2.9%, forget 3.2%. It's really 3.5%. The economy's much, much better than we ever thought. And then we look at this and we say, well, how in the world did this happen? It's completely impossible. And when we look at these numbers, we see, well, what did they include in this? Well, this was the time period where they used soybeans and they exported it out of the country, which pushed it up. What's included in this GDP number? Well, the spending of people in the country. And what's included in that? Healthcare. How high did the premiums go? Pretty darn high. And then you have spending on utilities, air-conditioned bills, inventories. You put all of this together, and you have almost 2% right there. This whole thing is completely manipulated. Because all the other quarters, they were at like 1.8%, 0.7%. And remember, Obama, he never got that 3% GDP number. And here we are at the end of the year, he got 3.5%. It's a holiday miracle. And then we look at the Fed's National Activity Index. Well, this has tumbled to 3-month lows. It is down negative 0.27 in November. And when you compare this with the hope of the people, hope is rising, but the Fed National Activity Index is tumbling. Industrial production is tumbling. Durable goods declined. When we look at the hard data of real estate, it's declining. When we look at the retail numbers, it's declining. When we look at income levels, they're declining. When we look at spending, it's declining. When we look at savings, it's declining. This data that we're looking at is absolutely awful. Now, out in Italy, well, Italy has now joined the bail-in crowd. Monte dei Paschi is going to be rescued by the Italian state using the 20 billion euro bailout package, and is going to force losses on bondholders. In this particular case, the bail-in will use bondholders' money, but depositors will be on the hook in the future cases in Europe. Now, I just want to go back to Cyprus for a second, because this is very similar. Let's look at the timeline in Cyprus. June 25th, 2012. Cyprus formally requests a bailout from the EU. November 24th, 2012. Cyprus announces it has reached an agreement with the EU, the bailout process, once Cyprus banks are examined by EU officials, that they'll be bailed out with 17.5 billion euros. And March 16th, 2013. Cyprus announces the terms of its bail-in, a 6.75% confiscation of accounts under 100,000 euros, and 9.9% for accounts larger than 100,000 euros. A bank holiday is announced. Now, this happened Friday night going into Saturday. March 17th, emergency session of Parliament to vote on bailout bail-in is postponed. March 18th, 2013, bank holiday extended until March 21st, 2013, which means the banks are closed. You cannot get your money out. March 19th, 2013, Cyprus Parliament rejects bail-in bill. March 20th, 2013, bank holiday extended until March 26th, 2013. March 24th, 2013, cash limits of 100 euros in withdrawals begins for the largest banks in Cyprus. March 25th, 2013, bail-in deal agreed upon. The depositors with over 100,000 euros will lose 40% of their money. 40%. And that's coming out of the Bank of Cyprus. Out of the Bank of Laiki, 60%. Look how fast this happened. I mean, back in November, they were discussing the deal. In March, boom, everything was shut down instantaneously. What are we going to see in Italy? What backlash is this going to have? Because you know it's going to happen. You know this is going to spread. They've already done the test case. And it looks like it's beginning. Get prepared, everyone, because it's coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.